Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
for the global commodity markets. These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. U.S. crude stocks rose while gasoline and distillate inventories fell last week, the Energy Information Administration said on Wednesday. Crude inventories rose by 13.8 million barrels in the week to March 5 to 498.4 million barrels, compared with analysts' expectations in a Reuters poll for an 816,000 barrel rise. Crude stocks at the Cushing, Oklahoma, delivery hub rose by 526,000 barrels in the last week, AIA said. Refinery crude runs rose by 2.4 million barrels per day in the last week, AIA said.
Ukrainian trade houses have begun signing forward deals for wheat from the 2021 harvest for future export despite relatively high domestic prices, analyst APK Inform said on Wednesday, citing uncertainty over prices for 2021 Russian wheat. Russia doubled its wheat export tax to €50 $60 a ton in an attempt to curb coronavirus-driven food price inflation. The Ukrainian government says the domestic wheat harvest could jump to 29.5 million tons in 2021, from 25.1 million tons last year, with exports potentially rising as high as 22 million tons, up from 17.5 million tons in the previous season.
Moving on to the top news in the energy sector.
The oil and gas industry in Australia on Wednesday launched an effort to work on ways to cut the costs of dismantling offshore oil and gas facilities at the end of their lives, a task estimated at $50 billion Australian dollars. Backed by BHP Group, Chevron Corp, ExxonMobil Corp's Esso Australia, Santos Limited and Woodside Petroleum and others, the Centre of Decommissioning Australia aims to help the industry build local expertise, come up with dismantling plans, and cut costs. We're looking at $50 billion Australian dollars of work over the next 50 years, so decommissioning represents a multi-generational challenge for Australia, said Miranda Taylor, Chief Executive of National Energy Resources Australia, an industry group coordinating the effort.
Myanmar's fuel importers have switched to other forms of payment, such as telegraphic transfers, after protests against a military coup disrupted trade, driving February imports to their lowest in more than 3 years, two industry sources said. A civil disobedience movement has crippled government business, unleashing strikes at banks, factories and shops since the army ousted Aung San Suu Kyi's elected government in a coup on February 1. Now importers are paying in full upfront for fuel cargoes, using telegraphic transfers from local banks to foreign ones as suppliers are no longer accepting letters of credit, the sources, who have knowledge of the matter, said on Wednesday.
Next, we have the top news in metal markets.
Copper prices will surge to an all-time high over the next 12 months as a result of strong demand from China's clean energy drive and years of underinvestment in global mine supply, the chairman of Chinese metals trader Mica Group said on Wednesday. Benchmark prices for copper, widely used in power and construction, hit a 9-1 half-year high of $9,617 a ton on the London Metal Exchange on February 25, within striking distance of the all-time peak of $10,190 set in 2011. Partly driven by optimism over coronavirus-related fiscal stimulus. The metal has since eased to around $8,900 but He Jinbi, who founded Mica in the 1990s, believes as top consumer China builds metals-intensive renewable energy and electric vehicle infrastructure, copper and other base metals will see serious supply deficits in future and be subject to capital inflows.
The global platinum market will be roughly balanced this year after a record undersupply of almost 1 million ounces in 2020, but more deficits loom as demand picks up, the World Platinum Investment Council (WPIC) said on Wednesday. Platinum is used by automakers who embed it in vehicle exhausts to neutralize emissions, as well as by other industry, jewelers and for investment. Years of oversupply and a weak demand outlook dragged it from $2,290 an ounce in 2008 to $558 last year, but prices surged to 7-year highs above $1,300 this year as investors reassessed its prospects. We will now look at the top news in the agricultural sector. The U.S. Agriculture Department (USDA) left its outlook for domestic corn and soybean supplies unchanged at 7-year lows on Tuesday. While the stock's forecast was slightly bigger than what analysts were expecting, it showed that supplies will remain tight until U.S. farmers begin harvesting crops in the fall, when a big crop will be needed to satisfy robust domestic and export demand. Chicago Board of Trade soybean and corn futures sank to session lows immediately following the report's release. But all three commodities quickly returned to their pre-report levels, with the trade focused on forecasts for planting weather in the United States.
That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.